Welcome to Explain the Charts. Today, we're taking a look at Google stock, to see what the current news and chart data tell us about where the stock might be headed. Recent headlines surrounding Google are a mixed bag for investors. On one hand, Google's aggressive investment in nuclear energy to power its data centers and AI projects has been met with positive sentiment. On the other hand, Google faces scrutiny from regulators over its advertising practices and antitrust violations, with the Department of Justice even proposing a breakup of the company. Despite the mixed signals, investors are closely watching Google's earnings release, with analysts projecting strong revenue growth and a record quarter for the Google Cloud segment. Looking at the daily chart, we can see that Google has been on a strong upward trend for the past few months, climbing from around $120 to its current level above $140. The stock has shown resilience amidst the volatility of the broader market, suggesting strong underlying fundamentals. However, the stock has recently pulled back from its recent highs, indicating potential profit-taking and hesitation from investors. The recent pullback has brought the stock to a key support level around $135. This level has been tested several times in the past and has held as a strong floor for the stock. If this support level breaks, we could see a further decline towards the next support level around $125. On the upside, the stock faces immediate resistance at the $145 level. This level has previously acted as a ceiling for the stock and could prevent it from making significant gains in the short term. Let's zoom in on the 1-hour chart and see what kind of short-term picture it paints. On the 1-hour chart, we see a clear pattern of consolidation. The stock has been trading in a relatively narrow range between $138 and $142 for the past few days. The consolidation suggests that traders are waiting for a catalyst to drive the stock in a clear direction. If the stock breaks out of this consolidation range to the upside, we could see a move towards the $145 resistance level. However, a break to the downside could bring the stock back to the $135 support level. This consolidation pattern suggests that traders may be hesitant to take large positions until we see a clear break in one direction. To get a better understanding of the short-term volatility and the potential for a breakout, let's switch to the 15-minute chart. The 15-minute chart shows a lot of chop, with the stock bouncing back and forth between small price ranges. This type of price action is typical for a market that's indecisive and uncertain about the future direction. The recent consolidation on the daily and hourly charts is reflected in this short-term volatility. Despite the short-term volatility, it's important to keep an eye on the overall trend. The daily chart tells us that Google is still in a bullish uptrend. If the stock breaks out of the current consolidation range on the 1-hour chart, we could see a move back towards the $145 resistance level. On the other hand, if the stock breaks down below the $135 support level, we could see a steeper decline towards the $125 support level. This could be accelerated if there's a negative news event or a disappointing earnings report. Remember, this is just a technical analysis and not financial advice. Always do your own research and consult with a financial professional before making any trading decisions. To summarize, Google is currently in a consolidation phase after a strong upward trend. Key price levels to watch include the $135 support level and the $145 resistance level. A break to the upside would be bullish and could signal a move towards the $145 level. However, a break to the downside could be bearish and lead to a deeper decline towards the $125 level. The stock's short-term volatility is high, and a catalyst is needed to break out of this consolidation range. Keep an eye out for Google's earnings release and any regulatory developments regarding antitrust investigations and advertising practices. These events could have a significant impact on the stock's price movement. Additionally, the overall market sentiment and broader macroeconomic trends should be considered when making trading decisions. Remember, this is just a technical analysis and not financial advice.